All eyes on Apollo Tyres because the company in its annual corporate day has unveiled Vision 2026 while setting ambitious targets. The management has come up with 4 key statistics to be achieved in the next 5 years. First one is their revenue target, where the company aims to achieve total revenues of around $5 billion, which is more than double from its current levels, because as per FY21, the company clocked in total sales of around $2.3 billion. That implies to 16% CAGR growth in the next 5 years. Second target that they have set is in terms of ROCE, where the company aims to have this in the range of 12 to 15%. Third one is in the terms of EBITDA margin, where the company sees this more than 15% by FY26, and the third target that they have set is for net debt to equity ratio to be under 2 times. So that's what the company is aiming to achieve in numbers. But now let's look at the strategy that they wish to implement in order to achieve this. Now, talking about their India strategy. Now, the company has come up with the 3R strategy in the domestic market. First one is their range, where the company plans to expand their network in the domestic and the export market. The second R is for the rural focus, where the company aims to enter new areas. And the third R is the retail focus, because the company going ahead will focus more on the branded retail, because 20% of the total revenue in the current times is coming from this segment. The company also targets 20% of the India revenue by FY26 to come from exports, which is currently at just 10%. So that's also a doubler for them. That's also expected to be a doubler for them. And now talking about their strategy in the European market. So in this market, the company will be focusing on the premium car segments, where the company targets more than 40% of the revenue contribution over the next 5 years from the premium segment. Also in the European business, the EBITDA margin as per the company is sustainable and will only grow from here, led by the cost reduction in their Hungary plant. The company is approaching the end of its CAPEX cycle in FY22, so not much of the requirement in terms of the CAPEX from the company's side, and all the CAPEX that the company has done in the past will kick in and benefit the overall top line and the bottom line growth for the company. Now talking about margins. So the company is of the view that though they have been taking price hikes in the recent past due to the commodity price inflation, but going ahead, they target a like-to-like 5 to 7% reduction in their raw material cost over the next 5 years. So if that kicks, the margins of the company will also improve going ahead. Now talking about the technology and the innovation focus areas for the company. First one will be on the fuel efficient tires. The second one will be having sustainable materials to be used in the manufacturing process, and the third focus area in this segment will be on the tires designed specifically for EV application. So that's the great plan coming in from Apollo Tyres, but going ahead, it will be interesting to watch how the company actually delivers.